You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for a little bit of futures options goodness. Yes, it is time once again for TWIFO This Week in Futures Options. My name, of course, Mark Longo from the THE-OptionsInsider.com, as well as from the ever-exciting network upon which so many of you are binging out there these days. Of course, if you want more content in your lives, you know where to go. TheOptionsInsider.com/pro. The place to go to learn more. Usually it's where I welcome on a guest in the hot seat, of course, the FIA, Futures Industry Association event in town. So I've been running around hither and yon. A lot of meetings, a lot of people coming to town this week. So I'm going to keep it short and sweet this week. A Just the Facts, Ma'am edition of TWIFO. So without further ado, let's roll out the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where you folks can follow along. Just follow CME Group on Twitter or give us a follow at Options on Twitter. We tweet this report out right before showtime every Thursday. You folks can see it for yourselves out there. If you did so, you'd see, man, a heck of a lot of red on the tape this week. In fact, we could barely scrape together a top 5 for the light side movers and shakers this week, but just barely. Don't even ask for a top 7 because you're already talking about scraping the bottom of the barrel there. So, yeah, it's about 90-odd%, maybe 95% in the red this week, listeners. So not a lot of joy for the bulls out there. I guess that means we'll start in the light side movers and shakers this week because not much of them. So we'll get through it pretty quickly. Number 5, again, this just shows you the slim pickings of the light side this week, listeners. Number 5 is the 3-month SOFR. It's up 0.25 percentage point. So again, there you go. Listen, we can make a top 5, and that's, I think, literally it. I think if we went to number 6, it would already be losing. So there you go. This is all the gainers they have in the entirety of CME this week. That should tell you something about what's going on out there. Number 4, remember, we've been talking about the sectors a lot in the S&P 500. They're starting to come on our radar more and more. They are indeed tradable over there at CME, just not on the options front yet. Hopefully that'll change soon if more volume continues. But even then, we got the tech sector coming in at number 4 for the S&P 500. It's up about 1/3%. So, again, not huge earth-shattering movers here. Number 3, we're going back out to dairy, class 3 milk, up about 0.5% on the week. Number 2, one of our frequent offenders out here, it is Bitcoin coming back this week, up nearly 3%, 2.92%. So crypto bucking the trend out there. Is it displaying the much ballyhooed reverse or non-correlation? I don't think so. Just a 1 week. Go back in time, you can see how correlated Bitcoin is to a lot of major assets out there, including equities. But this week, managing to buck the trend a little bit, up nearly 3%. And then the number 1 light side mover, number 2 on our frequent offenders list these days, it is nat gas, up 6.42%. It was number 5 in the same direction last week, up about 3.25%. So you're talking about a 10% move just over the last couple of weeks out there in nat gas. So nat gas, quite the banger out there. So not many light side movers, but one of them out there doing some business. You might have to hang our hat out there in energy this week, because I know a lot of you are fixated on all things energy. All right, now to the dark side we go. And speaking of energy, man, our dark side dominated by energy this week. Number 5, listeners, we got Brent off 8.06%. So again, our number 5 already a larger percentage mover than the highest, the biggest, the largest percentage mover we have on the light side. So an intriguing week, listeners. Number 4, keeping it in energy, it's WTI off 8.25%. It was number 4 in the other direction last week, up about 3.5%. So giving back what it gained last week and then some. Number 3, shifting gears to the metals, it's palladium off 10.3%. So a rough week for palladium. Again, you know the deal. Not much options paper to speak of in palladium. Number 2, it's back to energy. In fact, it's all energy the rest of the way here, listeners. Number 2, it's heating oil off 10.5%. And the number 1 dark side mover, also our largest percentage mover on the week, it is RBOB off 10.62%. So you got nat gas dominating the light side and energy dominating pretty much the rest of the tape. I think you know where we have to start this week, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's dive in with a little bit of old energy, a little bit of the old nat gas. You know where to go to find this for yourselves, listeners. CMEgroup.com/TWIFO, TWIFO. TWIO/TWIO should also work this week in options. They sometimes use that interchangeably over there at CME, but you know you can find it if you go to /TWIFO. Once you're there, go to that drop down, listeners. You're going to slide down. It's an alpha order list. You're going to slide down 3 slots to energy. Then we're going to go down 3 more to nat gas, where we begin our journey this week. Not too long ago, we had Carly Garner on the show. She was talking about the SEP3 calls. Those worked out pretty decently. Didn't quite get to 3, but we got close enough to take them off for a little bit of money. Then we saw the retracement back to the dark side a little bit in nat gas. Seemed like maybe we were going to hang out around maybe the 2.5, 2 3/4 level for a little bit. Certainly the skew wasn't pricing in a lot of action. And then, bam, this week, listeners, we're up 8.7% just since Monday. If you go back to the end of last week's show, up about 6.5%. Nat gas well north of the 3 handle yet again, 3.18 as we're kicking off the show, up about 25, almost 26 cents just since the Monday session. So a banger week for nat gas, and again, a 3 handle again. So looking a little bit frothier, a little bit more effervescent out there. In terms of paper, are we seeing an active week? The answer is, oh yes, quite the active week. Remember, nat gas usually 400, 440, maybe 450 on a banger week. This week, 738,000 contracts already on the tape, so closing in on 2x. So a very active week, and of that, 63% going up in the November contract that has about 22, 21 days to go. So we're going to hang our hat out there, listeners. You might be wondering, with all this action in nat gas, vol getting a little bit juicier? The answer is actually no. 58.80, so off about 1/3 of a point, so back below that 60 handle again. So actually relatively light, historically speaking, for nat gas out there. Remember, we've seen this in triple digits not too long ago, so closing in on half that vol level right now. In terms of skew, what are we seeing out there? Remember, we were saying for a while, too, on the show, nat gas skew not really pricing in a ton of action in either direction. This week, shifting gears a little bit. Last week, the puts about 1% cheap. They're still 1% cheap this week. The calls last week, about 4% bid. This week, about 4% bid. So not seeing a lot of evolution in that November skew. We've said before, though, if you go out a little bit farther, remember, nat gas, very seasonally driven, seasonally impacted. So we see that skew shift as you get into Q1 of next year. And that is the case again right now. You get into February and March of next year, you're seeing those calls are about 10, almost 10.5% bid, and the puts a little over 7% discount. So very, very steep commodity skew out there. Bid to the upside, discount to the puts. Kind of what you expect in the seasonally high season for nat gas out there. So if you're looking for a little bit more juice in the calls, maybe you want to fast forward a little bit out to Q1 of next year, because you're not really getting a lot of bang for your buck if you're trying to come in here and overwrite right now, and you're not getting a lot of discount to the puts. But you go out to February or March of next year, you can do collars, certainly probably for even and maybe even for credits if you line them up nicely. So intriguing stuff to be found out there. In terms of action, what is the big dog out here in nat gas this week, listeners? It is the 2.5 puts going out in November, dominating the tape, nearly 50,000 contracts. So you're talking roughly 2x all of silver just in this one put in nat gas, listeners. So that's a pretty active week. And the big dog coming today, 26,000 going up today. Man, nat gas popping off today, listeners. Yesterday, about 11,000, 6,000, almost 7,000 on Tuesday, about 4,000 on Monday. It's like closing earlier in the week, opening yesterday, and today's paper could be either way because there's about 41,000 contracts open on this strike coming into today. We've been talking about downside puts for a while. Usually it was the 2.25. 2.5 is actually fairly rich in terms of strike level, given what we've seen for recent price action in nat gas, but maybe some folks want to lock in what they have, these price levels out here. Again, you're not paying a ton. If you are buying those 2.5 puts right now, they're kind of flat to the at-the-money vol, which is also pretty low. Again, you're not getting the discount that you're getting in February or March, but historically, vol levels not explosive right now, and there's not a huge bid to the puts or really any discount, just kind of flat. So I suppose there are worse times to want to hedge. If you wanted to sell those, you're not getting a ton of juice for them there either. So maybe more of a hedging story there. In terms of number two, we do have some calls, and that's kind of what I was looking for out here to see if we're going to start seeing the call wing light up this week. I mean, we are blowing through the 3 handle. That's usually a psychologically important level for a lot of people out there. You'd expect some upside action on the call wing, and that is the case because right behind it we have the 3/4 calls, which is right around the at-the-money strike now, doing about 46,000 contracts as well. So only a couple of thousand behind those 2.5 puts. 3/4 calls active all week. Kind of a tie between yesterday and today. Yesterday, 16,300. Today, 16,400. So neck and neck yesterday and today. 8,200 on Tuesday, about 5,000 on Monday. Looks like opening throughout the week. Today certainly can be opening as well. About 21,000 contracts open. We'll know more, obviously, a little bit later once we see the OI updated. But either way, 2.5 puts and 3/4 calls. How you like that? You like that as a strangle, listeners? You like that more as a risk reversal? Selling the 2.5 puts, buying the 3/4 calls? Again, you're not getting a lot of skew working for you in that environment because the puts are flat and the calls are slightly a bit, but it's not a ton in either direction. So maybe that's the way you want to bite this off. You want to sell the 2.5 puts to finance your 3/4 calls. Worst case, you get some nat gas put to you at 2.5, given the seasonality. Maybe not the worst trade out there either. And then right behind it, we have the 3/2 calls. So 3/4 not doing it for you. 3/2 doing almost 40,000 contracts this week. The banger day again today, 18, almost 19,000 going up today. About 10,000 yesterday, 8,500 on Tuesday, 2,100 on Monday. Slightly opening on Monday. It's like closing the rest of the week. Today's paper, 50-50 because there's about 21,000 open on the strike. So it could be closing today as well. It'd be interesting if you're closing your 3/2 calls. Again, we did get the move this week, so maybe some folks saying, okay, this is enough for me. I'm getting the heck out of Dodge. Doesn't seem like, looks like it's mostly opening throughout the week on the 3/4 and closing on the 3/2. It'd be a weird time to roll down from the 3/2 to the 3/4, but then again, we have seen weirder things. Usually you'd see it the other way as they're blowing through that 3/4 strike. You'd expect them to take them off for some profits, maybe roll up to the 3/2. Doesn't seem to be like what the paper is showing us out here this week, but again, weirder things have happened out here. And then right behind it, number 5, we have the 3/40 call. So 3/4 not optimistic enough for you. 3/2 a little bit too optimistic for your blood. allow me to present the 340 is going up about 26,000 times this week. Again, the banger day today. So today, lightening up the tape and nat gas listeners. 12, almost 13,000 today. So pretty much half of the paper going up today. 11,500 yesterday, about 1,000 on Tuesday, and a couple of hundred on Monday. Today's paper lines up almost exactly with the OI. So that's also kind of weird. Could be closing. Again, we've seen stranger things. Are you taking off all your 340s right now? Maybe, if you got the move you wanted. We've seen weirder things. So interesting call strikes out here. Let's scroll a little bit farther down just to see if anything else interesting and or aberrant is popping up on the radar. And the answer is mostly no. People wonder about that strip out here. It looks like the strip this week is on the 9 strikes. Maybe that also shows you how a little bit of sentiment has changed. We were talking about 5 3/4 and 6 calls not too long ago. Now we're talking 9 calls. That strip going out from May of this year all the way out to pretty much the end of the year, going up 2,500 times. 9 calls going up in blocks across the board. I don't even need to check. I know it's opening. These trades in the past have all been opening out here. Yeah, and all that looks like going up today as well. So today, just a very active day out here in all things nat gas. So is today the move you wanted, listeners? Were you loading up on some of the upside? Were you in on these 3 calls again? Do you like this upside move? Is this getting you a little bit enticed by nat gas again? Are you maybe intrigued by a little bit of that skew out there in Q1 of next year? Does that make you want to maybe lean into some setups, maybe selling put and buying call out there? I'm curious. Hit us up. Let us know. I know a lot of you out there, when you're looking at futures options, you're starting to nibble at nat gas again these days. Could be through these. It could be through some of the ETFs we see out there as well. Hit us up. Let us know what you're up to. Since energy is the big dog this week, we got to keep on rolling with WTI. WTI coming into showtime about 82 1/4. So giving up some of that ghost. I mean, dude, they're coming for it. We were talking about triple digits potentially in WTI just a week ago. We were in the 90s again, giving up 8.5 handles or about 9.5% just since Monday, listeners. My goodness, you go back to the end of our show last week, off about 8.25%. So they are really coming for it. I think there were some inventory surprises out there, which are potentially potentially shocking a lot of people out there. So strong inventory weighing on all things WTI. I guess those OPEC production cuts, they can't prop it up forever out here, at least for this week. So, yeah, we're back in the 80 handle. 82 1/4 is where we're hanging out coming into showtime. Let's see if the paper is lighting it up out here. And the answer, wow, yes, very robust week for WTI. Again, similar volume levels to what we normally expect in nat gas. Somewhere around 400, 450 is a normal week for WTI. And again, we're closing in on nearly 2x that. 878,000 contracts up already in WTI. So another banger week out here. And once again, unlike the equities, which all can't get enough of expiring today, WTI going all the way out to the November contract. A whopping 12 days, listeners. That has about 38.5% of the paper. And again, that just shows you how the frame of reference has changed for this show, listeners. When we first started it, we wouldn't even look at anything expiring within 2 weeks. We would say, oh, that's just gamma. That's nonsense. That's noise. Now, if you ignore that stuff, listeners, you ignore the lion's share of the paper in most products, outside of the ags and a little bit here in the energies. But again, we're going out 12 days, so not that far here either. Again, 82 1/4 on that future. What's the vol right now? Getting juicy. I think this downside move surprised some folks. We're threatening a 38 right now, about 37.5. That's up nearly 6 points, so getting frothier, getting juicier. Certainly when you compare it to equity vol and a lot of other products out there, a roughly 37, almost 38 is nothing to sneeze at from a vol perspective out there right now. Certainly not many complexes can rival that. And in terms of skew, last week, we had a pretty decent bid to the puts. So they were in front of this one last week, it seems like. 8.2% bid were the puts last week. 5.5% cheap were the calls. So they were a little bit biased to the downside. I think we were speculating on the show that maybe some folks thought we were a little top heavy, even though we had Carly on the show not too long ago prognosticating about a triple digits in WTI. That could still come to pass, obviously, but a little bit more challenging after this week's move. This week, the skew has flattened out, so the bid is gone for the puts, about 1% bid now, and the call is 1% bid as well. So it's an even smile in both directions, pretty much flat, only a 1% bid. So that, again, that maybe shows you at least for the near term, we're finding some equilibrium, at least from an options trading perspective out here. And in terms of action, what is leading the dance out here, listeners? It looks like it's the 85 puts going away in November, leading the dance with about 26,000 contracts. The big day for these, unlike nat gas, not today, it was yesterday. About 10,000 going up. Looks like paper mostly bailing on those. About 5,000 today, 8,700 on Monday, and 3,000 on Tuesday. It looks like they were closing all week long. It could potentially be closing again today. There's about 8,600 open on this strike, and they put up about 5,000 so far today. So maybe folks, as we are threatening the 85 strike and then breaking through it, deciding, hey, taking my puts off, taking my money off the table, live to fight another day with a little bit of house money in my back pocket. Hard to fault them. So yeah, closing all week on these 85 puts. They were bid last week. Clearly some folks had some in their back pockets and now enjoying their spoils, shall we say. Let's go out to our number 2. That is the 80 put, so a little bit farther out. Haven't quite gotten there yet. Let's see what the action is out there. 22,000 contracts there. The big day for those actually today. 9,500 going up today. 7,500 yesterday. 1,500 on Tuesday. 3,500 on Monday. Opening on Monday, it seems like, and then closing throughout the rest of the week. It is potentially a bit of a roll going up on Monday because Monday was a very active day on the 85 puts as well. So maybe some folks taking off their 85 puts and then roll into the 80 puts. Then it seems like closing throughout the rest of the week. Today, almost 1-to-1 with the OI, so some folks could be bailing again today. Again, we haven't quite gotten to the 80 strike, so they could be deciding to keep their powder dry, hope for a little bit more aggressive of a move. But you got a pretty decent move over the past week. You saw a nice little pop in vol. Maybe not the worst time to get rid of any downside you may have, at least in the nearer term portion there. The contract's going away in 12 days. And then the third most active contract, we have to go out a little bit, listeners. We go all the way out to the DEES contract. It's the DEES 80 put going up almost 21,000 times this week. Maybe wondering what is the vol in DEES, and it's about 37 and a quarter. So not that dissimilar from what we're seeing out here in November. All right, looks like the 80 puts. The big day for those listeners was Wednesday, 8,700 going up, mostly opening there, 6,300 on Tuesday, again opening, almost 4,000 going up today, and about 1,000 on Monday. Obviously, we don't know today, but there's 22,000 contracts open, so this is a very popular strike. Again, these even money strikes, they tend to draw a lot of OI at the end of the day. Right behind it, we have the 70 put, so if this move this week, not enough for you, think we got more downside to come, allow me to present the 70 puts going up 19,400 times the big day. Yesterday, about 10,000, mostly opening. Today, about 4,500. And then Monday and Tuesday, about 2,600 each. It's like closing on Monday, opening throughout the rest of the week. And again, about 25,000 contracts open on this strike as well. So today's paper is anyone's guess. If you want some call action, how about the par calls? They were also going up in December, about 19,000 times. Looks like pretty steadily throughout the week, even though the big day was Wednesday, about 9,000 going up on Wednesday, 3,000 today, nearly 4,000 on Tuesday, and about 4,400 on Monday. Again, closing on Monday, it looks like opening throughout the rest of the week. So some folks taking advantage of a dip to pile into a few more par calls. Maybe they're overwriting them. Either way, there's a lot of size open on the strike, which again, it's a very psychologically important level. 46,000 contracts open on this strike. So interesting to see what happens there. I know we were talking about triple-digit WTI not too long ago. Maybe some folks had this on their bingo card, hitting that by the end of the year. I think Carly was on that level by the end of the year as well, so maybe some of that par OI reflects that upside optimism. Let's go a little bit farther out to see if we can find anything else. Looks like if we got to January, it was the 70 puts leading the dance with about 11,000 contracts. 5,500 of that, so pretty much half going up today. 3,000 on Monday and about 2,300 on Wednesday. Opening was like earlier in the week, so maybe some more longer-term downside piling in a little bit farther out in January in WTI. Is that what you expected, listeners? That surprised you? I'm curious. Hit us up. Let us know. Looking at the rest of our movers and shakers this week, we can talk about Bitcoin. It is number 2 to the upside, but we know not a ton of paper lighting it up out there. Plus, we have our crypto rundown show where we do a full deep dive into all things Bitcoin and ETH and everything else out there. So if you're curious about all things crypto, I encourage you to check that out. And then we have Palladium to the dark side. Again, not a huge mover and shaker out there. But you know what, listeners? Just to dispel the notion that I am a rates hater, and because we've been talking a lot about getting on or maybe getting off the boat right now with a 10-year note, and we have 3 months SOFR lighting it up such as it is to the light side, I think we might make a quick sojourn out to the rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, we're going to wrap it up here on this Just the Facts, ma'am edition. Got to get out some more folks to meet with and see here on this FIA week. But before we do that, let's take a sojourn into the rates, in particular the 10-year note. I know not a lot of you out there slinging 3 months SOFR, even though it's a very active contract. And not a lot of you, we talked about the 30-year recently with Dr. Vix. Not a lot of you slinging out there. It does seem like the 10-year is the sweet spot for a lot of you. So unless you ask for something else specifically or we see something else really lighting it up, that's probably going to be our go-to destination for the rates out there. Again, you could find it, listeners. Pop into that drop down, go almost to the bottom. I'm going to go 3 from the bottom to interest rates, then U.S. rates, and then scroll down the product list to about halfway down till you get to the 10-year. Again, a lot of rates products lighting it up over there at CME Group. And speaking of lighting it up, 10-year lighting it up this week, 3 million contracts, pretty much even on the tape right now. So a pretty robust week. The 10-year hanging out 107.10 right now. Everyone and their mother is up in arms about yields. Yield. What's going on with the notes? What's going on with the yield? It has been a very important, a very seismic story for the markets right now. We saw last year a bit of an aberration. We saw the rates selling off and also the equity markets. This year we've seen a rally in the equities, and lately we've seen rates starting to get a little bit troubled, a little bit turbulent, and actually, interestingly enough, dragging the equity market down along with them. So that correlation kind of intriguing to a lot of folks out there. So a good time to sojourn into the rates right now. And unlike equities and everything else, which is all obsessed with expiring tomorrow, the 10-year says we're going to take a little bit of a break from that. We're going to go out to November, 22 days. That's where about a little over a third, about 36% of this 3 million contracts went up out there. So obviously a little more than 1 million contracts going up here in November. What is the volume? You might be asking in the 10-year. And again, rates outside of 3 months SOFR are not really a bastion of volatility. So 8.25, up about nearly a full point, about 0.85. So that's actually a decent pop for rates vol. Again, showing kind of how much uncertainty we're seeing out there in the rates market right now. We were just talking with our buddy, the uncleist of Mike's over there on the Option Block show, and he's been a big fan of the 10-year note, a big proponent. He has a lot of his clients in it. And we were talking about the sell-off out there and how he's trying to make that up by overwriting call premium aggressively out there. Are you a fan of the 10-year note? Is that an approach you're taking? I'm curious. Hit us up. Let us know, listeners. In terms of skew, we haven't really historically seen aggressive skews out here in either direction because, as we just mentioned, the vol's sub 10. So you're not going to see huge bias. And that's pretty much the case this week. Last year, we saw a bit of a bid to the puts, which for the 10-year is actually notable. It was about 2.5% bid. The calls were flat. This week, the puts getting a little bit juicier, 3.3% bid. And intriguing, the calls getting about 3% discounted. So again, most products, that's kind of not much. It's a bit of a shrug of the shoulders. But out here in the 10-year, that's actually worthy of note, a 3% discount. Again, you're only talking about an 8.25 starting point anyway. So taking 3% off the top of that, not nothing at the end of the day. And in terms of action, what was leading the dance out here? If you said the 108 calls, listeners, which are now slightly out of the money calls, you would be the winner chicken dinner this week. 83,000 of these bad boys going up this week. The big day was yesterday, 46, almost 47,000. Again, 47,000, not even in total, just in one day, just in one option. That shows you how active the 10-year is out there. That was mostly opening, so folks piling into these 108 calls. And then behind it, listeners, we have Tuesday about 23,000 trading, today about 8,000, and Monday about 6,000. Again, opening all week long. So folks piling into these 108s. Are they overwriting aggressively? That's certainly possible. There's a ton of OI to be found here, though, about 62,000 contracts. So that's a big chunk. So today's paper could be anyone's guess what they're up to out there. And then right behind it, if you want some downside, since we are moving aggressively to the downside these days. How about the 106.5 puts listeners doing 80,000 contracts almost exactly this week? The big day again big day again Wednesday. Wednesday kind of just the banger day, obviously on the rates side. 46,000 contracts going up out there. Almost 19,000 on Tuesday, 9,000 on Monday, only about 6,800 today. And again, mostly closing throughout the week there. So some folks maybe having a little bit of downside, taking them off, putting some money in their back pocket, or if they were overwriting these, which, again, not a ton of vol, not a ton of bid to the puts, so I'd be curious to see how many overwriters there are in the 10-year note. Again, Uncle Mike's writing covered calls, so that's kind of the same thing, right? But not exactly the use case we normally see out here. Overwriting puts to the downside here, selling some puts to the downside. So I'd be curious if you are out there slinging these, what you're up to. But either way, 106.5 puts closing throughout most of the week. If I had to hazard a guess, I would say a lot of folks had those in their back pocket, taking those off now for a rainy day with some house money in their back pocket. The puts did get more bid this week, so that would also maybe back up the fact that folks are coming to buy some of these. So intriguing stuff out here on these 106.5 puts. And then right behind it, listeners, we have the 106 even puts. You want a little bit farther out of the money. There you go. They went up about 74,000 times this week. The big day, again, Wednesday. That jobs data really kind of shocking a lot of people on the rate side. Almost 23,000 contracts on Wednesday. 20,000 on Tuesday. Looks like opening on Wednesday and slightly closing on Tuesday. So intriguing. Some folks putting stuff on, obviously, ahead of that number, and then getting the heck out of Dodge afterwards. And then Monday, about 20,000, slightly opening there, only 12,000 today. And then beyond that, we got the 107 puts doing almost 70,000 contracts as well. Just a banger day to the dark side. A banger week, I should say, to the dark side listeners. Not exactly surprising. We've seen a lot of red on the rate screen this week. The big day for these, though, not Wednesday like everything else. It was actually Tuesday, 26,000. Slightly opening there. Then 13, almost 14,000 on Monday, slightly opening there as well. About 12,000, almost 13,000 on Wednesday, slightly closing. And then today, about 6,000 on the tape. So a banger week out here in the 10-year. Let's just scroll around a little bit, see if you see any other interesting and or aberrant paper. What if we go all the way out to D's, listeners? How about some 105 half puts? Those are lighting it up this week as well. 66,000 of those. The big day for those, interestingly enough, not Wednesday, not even Tuesday. It was Monday, 22,400 going up on Monday, mostly opening, and they kept opening all week long. Today we got 18,500, Wednesday 14,000, Tuesday 11,500. So looks like folks piling into the 105 half puts in December out there. Intriguing stuff. Skew-wise, we're seeing pretty much the same setup in the calls. They're about 3% cheap. But interestingly enough, in December, obviously a little bit more time to run, those puts are almost twice as bid as they are in November. So the puts in November, 3.3% bid. The puts in December, almost 6% bid, 5.8% bid. So a hefty premium to the downside. I mean, hefty in air quotes. This is rates after all. But still, hefty premium. In fact, that's the most pronounced bias we see in any direction in any month on the term structure here. In the 10-year, the biggest premium, the biggest bias is the almost 6% bid to the downside puts in December. Again, given this week's price action, kind of hard to argue with that. Maybe pricing in that we're going to see the 10-year moving a little bit lower, rates moving a little bit higher. Intriguing stuff. All right, and that is going to do it, listeners, for this Just the Facts, ma'am, edition of This Week in Futures Options. Got to get the heck out of Dodge now, listeners. We'll be back again on the network tomorrow, noon Central, 1 p.m. Eastern, to talk about all this crazy vol. Will we have a guest star of the logins variety? I guess you got to tune in to find out. If you're saying, what the heck is he talking about? Yeah, check out some back catalog episodes of Volatility Views when we were hanging out 25 and above, and our friend Mr. Loggins would join us for a little bit of the old danger zone. Will it happen again tomorrow? Got to tune in to find out. After that, exclusively for you cool cats and kittens in the Secret Club, we're back once again with a little bit of the old options oddities. What crazy trades do we have on this week? Did they work out? Only one way to find out. TheOptionsInsider.com/pro, or for all you cool kids, /Secret Club. Once you're there, Kick the tires, light the fires. Immediate access to our pro podcast feed. That gives you 260, 270, I've lost count, episodes just coming at you. The floodgate is open once you hit that join button, listeners. On top of that, you're getting a couple of more a week out there. So great pro Q&As. We had a great one about trading psychology, an underexplored subject out there, but a very important one. You folks were all over that. Great questions. We have to bring them back because we were actually oversubscribed with questions. But fascinating look at trading psychology. We had a clip of that. You can check it out on our socials over there, listeners, at Options on Twitter and most of the other major platforms. And then if you want to participate on future ones, theoptionsinsider.com/pro. Then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.